Hi everybody, very warm welcome. Hopefully you can hear me okay. I've actually managed to switch my microphone on, which always helps. Just move that out of the way. Have you got me okay there? Okay, fine. Yeah, just to let's turn myself down a bit actually. I'm a bit loud. Let's turn that down a bit. There we go, that's better. I've just been on cable. You can see it here. This is on the multiple time frame workspace. Got 15-second, 1 minute, 3 minute across the top. Down at the bottom, we've got 5, 10, and we're over onto the daily. There's been a nice move. You can see it here. This is the pound. It's been falling quite nicely. Went through the open relatively smoothly, and what we're seeing is a very strong buying in the dollar here, the red line. So in terms of the opportunities available, certainly cable is probably the best one. This is on, I think this is on 5 minute. Yeah, this is a 5 minute CSI. So it's still got a little way to go. You can see the strength of that particular move. And if you look at, let's have a quick scan around. Let's see what's what. It's really just developing nicely. You can see the trend monitor as bright red. This is on 15-second into a minute. It's solid red. Just flick that open full size, make it a little bit easier on the eye. And again, you can see we've got the volume point of control here, and we're starting to break away from the volume point of control on decent volume. And the nice thing with NinjaTrader is, which is more tricky on MT4 and MT5, because they're generally 2 hours out of whack. Doesn't mean you're 2 hours delayed in terms of live data. It just means it's not synced to your local time. So it's always tricky looking back and trying to establish, where's the session crossover? Why did this happen? Why did that happen? Where was the news release? Blah, blah, blah. In terms of Ninja, it's much more straightforward because it prints in local time. This is 8 o'clock London time. It's now 8:16 here. So this is the London Open. We've gone through that particular phase of price action. Ton of volume coming in here. It doesn't look particularly strong. Then we start to break away, and then you're really looking at other aspects. You're looking at support and resistance levels, and often I've got one on one of the other time frames on this, I think. As you break away from the volume point of control, you'll find, or as the volume point of control develops around this region where you've got the heaviest volume, what you'll also find, particularly on the accumulation distribution indicator on NinjaTrader, is it will build these levels and give you a channel, if you will, of platforms of support, ceilings of resistance, and it just gives a very clear indication of where is likely to be the breakaway. In terms of a retest, you've got this very strong region here. This has been tested half a dozen times. So if there was a pullback, this is going to give you a protective barrier. And it's important from the aspect, particularly if breakaway trading is your tactical, and there are loads of different tactics you can apply, but breakaway trading is one. It means you have to be patient, wait for the congestion to build, wait for it to break away, then confirm with volume. When you're taking that approach where you get these levels, they are terrific in terms of giving you some, first of all, an idea of when the breakaway or where the breakaway is likely to occur. And secondly, also regions around which to place your support, your stop losses above or below, depending on your risk management. We then start to break lower. We go through this low volume node here in terms of the VPOC, so we expect the price to move through there pretty swiftly. We've had some congestion building around here, so we've got volume building. Now we're starting to move down into this lower region where we've got lightweight volume in terms of the volume point of control histogram. We go up onto the 3 minute. Similar sort of thing. You can see the trend monitor here. The move's still developing nicely. We're still in here. Let's go up onto 5. There we go. Same principles. Now, what's interesting is you can see here on the volume down at the bottom here, this is the London Open at 8 o'clock. And normally you expect to see that higher because obviously that's the inrush of volume as London opens. So we started with relatively modest volume. When you're looking at comparative volume, this is from here is the European Open. Prior to that is obviously Far Eastern Asia over here. So we expect to see a pickup in volume through from 7 till 8. Then you expect to see a big surge here. What we actually got was a much bigger increase in volume on the second candle, not the first one, as the market starts to sell off trend monitor here is red, as you can see. So the trend monitor is really giving a heads up at the moment that, you know, this is a bearish move. What we're seeing over on the 5-minute CSI here, we've still got a little way to go in terms of the dollar approaching a overbought situation. Equally with the pound, you know, we've still got some way to go before we meet an oversold condition. Doesn't mean it gets to this level. It may well get to this region and go much deeper. It may reverse before it gets that level. These regions here, these levels here of 1820, just to give a benchmark, if you will, an indication of when a currency is approaching either an oversold or an overbought condition. It's not a target. It's not saying, well, at this point it is going to reverse. It just gives as I say, a benchmark of where that particular currency is in terms of its journey. In terms of looking at the dollar, if we go over onto the currency majors matrix, this will give you a straight through in terms of, you know, what's happening in terms of the dollar, the currency of first reserve. I've got cable, I've got dollar CAD, I've got the Aussie dollar, I've got euro dollar, dollar Swiss, and New Zealand dollar. I haven't got the dollar yen on here, but I've got that on the futures. Hop over there in a minute. But this just gives you a visual perspective in terms of whether the buying and selling in the dollar is actually universal from a chart perspective. And what you're seeing really is the answer to that question is almost universally yes. In terms of dollar CAD, obviously that's rising because we're seeing the dollar being bought, so that's fine. In the same way on the dollar Swiss, you want to see that rising as well, and all the others are bearish. So basically, the market is universally buying the dollar right now, and from that you can see that the trends are pretty much the same. Nice trend on dollar CAD, nice trend on cable, nice trend on Aussie dollar. Not perhaps quite so strong on euro dollar, and the reason for that is it is down here because the euro, and it's a nice example of why we're always looking for this combination of strength and weakness. We're always looking for that currency that is rising strongly and a currency that is falling strongly, because that is where you will see these strongest trends develop, purely because you've got both forces working in opposition, but actually working together to drive the trend. And that's what you're seeing right now in terms of cable and pretty much across the piece. The reason you're not seeing that so strongly in euro dollar right now is because the euro is flip-flopping around down here. If the euro were falling strongly, then it would be the same strength of trend. But actually what you're seeing in euro dollar right now is not the euro selling that is driving it, but it's actually the dollar buying that is driving this particular move. And as we always say, when you're looking at the CSI, that's what you're looking for. You are looking for one currency that's rising very strongly, and the steepness of the line will tell you that strength, and the other currency which is falling just as strongly, and that will deliver the strongest trend. You will not see as strong a trend in a pair where, for example, right now, I mean, if we looked at, really, you can pick them off. I mean, you look at where you've got currencies traveling in the same direction, for example, on the dollar yen, the dollar's rising here with the yen rising as well. There isn't going to be a trend on that particular pair. It's going to be in some sort of consolidation, purely because both currencies are traveling in the same direction. And the analogy I've used many times, I'm sure you've heard it before, is of two trains. If you've sat on a train and left the station, you'll know that, you know, you'll see another train coming out alongside, and maybe your train is moving a little bit faster, or maybe the other train is moving a little bit faster, but you're basically moving in the same direction at slightly different speeds, and it's exactly the same principle here. So you will not see a trend at the moment in terms of dollar yen. The only way you will see a trend in there is if one of them reverses. If the yen carried on higher and the dollar reversed, then you certainly would. Yeah, sure. Just switch off for a moment.
Just wanted to jump in there because what David was saying, to actually show you an example of that, of particularly what is happening with the British pound, because one of the things we suggest traders do when they start is they focus on not just, don't start with the currency itself, and a lot of it will depend on the time zone that you are trading. So here we're in the UK. we have the luxury and not, we've got the euro, we've got the pound. We know these currencies are going to be traded more heavily at this particular time. So start with a one currency and then pick off the pairs in that currency that you may wish to trade, but also look at what is happening in the pairs. At the moment, we know, as David has said, the British pound is being sold off quite heavily. This is the pound Aussie. But if we look at what's been happening, this is the trade that David has been looking at on cable, and this is what we want to see. We want to see this beautiful divergence and at a, carrying on and then potentially jumping in on a reversal, or even joining the move perhaps on a pullback. And if you understand when whether a pullback is actually just that or a reversal in the trend, as we saw earlier on the chart of the pound Aussie, the 10-minute chart. So we know there's a great move going on in pound in cable. Pound yen. What's happening with pound yen? Well, pardon me, I have lost it, apologies. Well, there's some movement there, but it's certainly not as strong. But all we can see is the pound is being sold, but we don't really know, but it's certainly not being sold as strongly against the yen as it is against the dollar. Well, it looks like we've got some really nice divergence against the Canadian. What about the New Zealand? Well, the New Zealand's turned over, they're going in the same direction. This one, as I said, and once you get your pairs, you can then focus on maybe one or two, and then go to another currency and pick up some pairs there as well. So maybe we just need this Aussie to turn up, and then we get a really nice divergence there. And then pound Swiss. So you certainly wouldn't look at pound Swiss at all because they're both moving in the same direction. But it's still, we still have a sell on the British pound. So how does that translate onto the actual charts itself? First of all, just to mention, this is an alert that you can put on the CSI on the MT45. It's not just on NinjaTrader, and it tells me that on the 10-minute chart, I'll just take it off now, we have had this is the cross that came up earlier. Crosses are quite important because you may have, the reversal move. This is the reversal move. You've not got it. You've missed it. You had a bit of consolidation. So potentially we could be looking at, either resumption or even a reversal there. It just depends on what we see on the chart. What's interesting on the 10-minute chart, it's on what we call the R3, R4. They are important levels. All the details on the indicators you will find at quantumtrading.com. There are videos, and it also explains how you can use the indicators as well. David has done a whole new bunch of videos on the quantum trading YouTube channel in readiness for a TradeStation, and there's some great stuff there which explains the indicators even more detail and examples. I don't know how many Camarilla videos did you do, David? 5, 6, 7? Like yeah, so there's a lot. There's about 70 or 80 videos on all the indicators, and the lovely thing about the indicators is you can then incorporate them into, we've developed them to support VPA, but you can take them and support them into your own trading tactics and strategies. So we know why we haven't got this divergence, because it's still around this R3 level. Looking at the 3-minute chart, we know why it isn't. We haven't had divergence. Going back to what I said about the volume point of control, there is no firm bias yet. Pound Aussie also has a habit of it kind of takes its time after London. It's because I've been involved with it for so long. You get to know the characteristics. It's like getting to know a stock. You get to know, is it more likely to move at London? No, cable tends to move more just after the London Open. The pound Aussie takes a bit of time. Sometimes it starts moving halfway, a couple of hours after London opens. Maybe has a strong move, and then it goes back into consolidation and takes off again in the afternoon in the US session. You get to know your currencies, and you get to know your currency pairs. You just know, because you're looking at these charts and you become familiar with them. This is this is purely based on observation. So it's around the volume point of control. So what does that tell us? We are going to have to be patient. The Renko, and I haven't spoken about Renko because Renko chart is a really important chart, especially when the markets are so flighty at the moment, because it absorbs all the whipsawing, and it really does not only give you potential signals to get in and also get out of trades, as we can see here. After a congestion phase, it then takes off. This is the little pullback that was obviously on a time chart, and you know the trend dot stayed blue, that stayed blue. It gives you the confidence to stay in, and then on it goes again. Then we had another pullback, and then we look for the reversal, which we actually saw on the 10-minute chart here. This was here when it couldn't actually get through the R4, and in many times when price gets to a significant level and you've got a Renko chart and you can see it's not going to push higher, you kind of know, do you know what, it's had, how many times did it try and get through the R4 there? It had 1, 2, 3, 4, 5, 6, 7, 8. You know, after 8 times, the chances are it's not going to go through. So you know, you either close out, you know, and wait for the move to the downside, which is what the Renko will also signal as well. Now, what's it signaling at the moment? Let me just pull this up. You can see here from the trend monitor this flip-flopping out of you know, the different colors. It looks like it wants to go lower because we know the pound is, you know, is selling off, but we need confirmation, so we have to be patient, and we can see that obviously on the volume point of control. So for pound Aussie, it's a case of being patient, and going back to the CSI here, see what's happening on the pound Aussie. Yeah, it's, you know, and what may happen, the pound may turn up, and you know, that will just, and that will you know, and in fact it'll be the exact opposite of what you may think will happen as well. Quick look at the daily chart. What's interesting is this is the candle that we're in at, obviously at the moment. This is the up candle. It's heading to the volume point of control. So on a longer term basis, you know, if it's got some upside, where is it going to go? Well, it's certainly going to hit at some point. It's going to probably hit the VPOC on the daily chart. But we are in this, you know, where it's trying to decide what to do, you know, in this wick on the daily candle. So it's really patience. And just to round off on the pound Aussie from yesterday, when we looked at that piece of price action on the 10-minute chart, this is how it was represented on the Renko chart. So not only did you have VPA on the time chart, you then had the Renko chart next to you to give you that additional confidence. We can see here, this is the congestion, this was the break higher, then we had the further congestion, this was the minor pullback that I said, but we knew that from VPA as well, and then we had the reversal on the shooting star that was preceded by the anomalous candle. So putting those things all together really should give you the confidence not only to get in, more importantly to stay in, and also help you to get out. And as I said, pound Aussie is absolutely fascinating. So that's my take on that. It was just to follow up from what David was saying, looking at, you know, when not to trade, not just when to trade, but also when not to trade.
Thanks, darling. Just move the chat box back out of the way. There we go. I've actually moved over onto the futures workspace, so we're still looking at a dollar matrix, if you will, but we're looking at it through the prism of the futures contracts. And just to explain, this is the 6A, so this is the Aussie dollar. This is 6B, so this is cable, but on the futures. This is 6C, this is the inverted dollar CAD, so this is CAD dollar, because in the world of futures, everything is quoted against the dollar as the counter currency. And that's why these numbers down here look a little bit strange, but if you invert them, you'd find that they would align with the spot rate. So this is basically CAD dollar. This is euro dollar, as you would expect. This again is an inversion. This is dollar yen, so this is yen dollar. and over on the right-hand side, I've got the New Zealand dollar. So basically, you're looking at every single pair here should be moving in the same direction if the dollar is being bought or is being sold. Now, the other aspect to it is it also gives you a different perspective in terms of volume price analysis, just in terms of the fact that you're looking at a very closely associated market. Obviously, the futures and spot are very closely related. The two will move to a comparative price as the futures contract comes to expiry. But until that point, they obviously do diverge somewhat. But what you're seeing right now particularly on the euro dollar, which is probably the interesting one at the moment, other than the fact that the other moves are starting to show a little bit of weakness now because the dollar is getting up into the overbought state. Cable certainly is getting down into oversold. You see the Swiss franc here. You've got the others starting to roll. You've got the New Zealand starting to roll maybe a little bit. But in terms of the euro, we're seeing some pretty strong buying. You can see it here jumping up all the time. So that is rising very strongly. Now, again, it's a question, you can see it here. This is on, let's just pop that up. You can see some buying starting to come in here. We get it under this candle, ton of volume under there at the open, really not going very far. Then we get some more buying coming in under this candle. So we're starting to see buying coming in, even some here. Now what we're seeing in terms of this particular rally right now, we're starting to see that volume fall away. So the question is this rally actually going to go very far? It really just depends on the shape of this volume and whether this continuation of volume falling away is going to be picked up with a candle that's going to push through. And once we get to this area here, where we've got a low volume node, then the amount of effort, the amount of volume that is going to be required to drive that through there is going to be minimal, because there's very little in the way of volume acting as resistance to that move higher. In terms of taking this particular trade, we're on a 5-minute chart here, so we can afford to look at it from a slightly slower term perspective. But this is what I meant about when you see the volume point of control here, this yellow line, which is the pivot of the market, the fulcrum of the market. Above and below, you get this channeling, you get these very strong regions which really define the ceiling here and the platform of support here. And once they break away, you've got terrific point of a resistance now in terms of the recovery, but in terms of placing stop losses, it really does define that area for you very cleanly. So you've got price-based support and resistance, but then you've also got volume-based support and resistance from a volume perspective on the volume histogram. Looks as though it's going to try and push higher, decent amount of volume buying under here. So yes, we've got this falling away in volume, which is a warning signal, because this is when you're looking at Wyckoff, you're looking at not only the individual candles themselves, this deep wick, you've got decent volume under here. So this is anomalous, and what the anomaly is telling you in this case is that we've got buying here, because if the volume in here were heavy selling, then this candle wouldn't have closed with this up body and a deep wick. It would have closed down here somewhere. So the opens up here, similar candle to that, for example, but perhaps not quite so wide a spread, because you can see the sort of volume associated with that. Then you get this candle here. So in other words, this has to be buying. It cannot be anything other than buying, because if it had been selling, it would have closed, opened here, and closed down here somewhere. So this has to be buying. You know that for a fact. We've got this little rally going on, but the rally is not looking terribly strong because the volume's falling away. And it's the application of VPA in terms of groups of candles, and its most powerful application, alongside the very simple principle of looking at single candle with single volume, is, as Anna mentioned, to do with this whole business of understanding when a primary trend is actually moving into a secondary, but then is going to re-establish into the primary. Those are the points at which traders close out, and it's the biggest issue of trading. Most traders struggle, not because they don't understand market behavior, not because they don't understand charts, not because they don't have enough money. It's because they cannot hold a position through the inevitable pullbacks and reversals, and it is a powerful application of VPA. It's the one thing that most traders struggle with, per se, bar none. It is the hardest thing to do. When you've got a trade, you've got some money in the bank, you're looking at it, the market starts to reverse against you, it starts to dwindle away a little bit, you panic, you close out, and you end up with another small profit. But given that every 10 trades, maybe you're making 6 losses and 4 winners, or 7 losses and 3 winners, the mathematics is very simple. You're taking a fewer number of profitable trades, but those profitable trades have to be bigger. They have to outweigh the greater number of smaller losses. So if you're taking, I don't know, let's say 5 pip losses and you've got 7 of those, you've got 35 pips on 7. The other 3 trades, you've got to do more than 10, 12 pips. If you're only doing 10 pips on each, and that's you're running at a loss in terms of your pip profitability. You have to sit in there and take 15. You have to sit in there and take 20. You know, that's what this business is all about. And that's where VPA steps in, because it will help to give you a very clear view on whether the reversal you're seeing is actually a full-blown reversal in sentiment. In other words, we're moving down here in bearish and now we're going to move into bullish, or are we simply seeing a bearish trend, your primary, a secondary trend higher, it's just a reversal, and then we're going to start to see this continue on lower in due course. It's just a massively powerful application of VPA. Over on the currency strength, we're seeing the euro still buying. The dollar is now starting to kick over a little bit. It's starting to roll. So that, in terms of this particular trade, will certainly help, because you're now starting to see the two working together. In other words, buying of the euro and selling of the dollar. And that's why you're starting to see this pickup in terms of this particular trend. How strong that trend will be, you can see here the volume is falling away. So from a VPA perspective, it doesn't look as going to go very far, purely because we've got falling volume and a rising price, and that is anomalous. What we want to see in a rising market is rising price, as indeed on a falling market, we want to see rising volume as well. Just see what's going on in terms of sentiment. I've got the VIX over on the right-hand side, so I know for a fact the indices are selling off, and they have been. This was the open, 7:45, 8 o'clock, here we are. We've got the YM, the NQ, and the ES on the top line on 5 minute. This is the daily. We had this massive surge in the NASDAQ yesterday. Decent volume associated with that, which is fine. But when you look at the VIX, just pull this over for you. This is where we are right now. The VIX is opened. We're up, trading up at 25.8, so it's gapped up. We're moving in congestion. Got a volatility trigger, so we're expecting some sideways price action. But that's the reason that we're seeing this this risk off at the moment, in terms, certainly from an intraday perspective. All trading around the volume point of control. Certainly the NQ is right up bang on the volume point of control here. You can see it. Got a very strong platform of support below. We've got this resistance above, channeling. It's you know, it's bearish at the moment, but again, you know, volume will display what's going to happen next in the next few minutes. The VIX is, as I say, is up there. It's gapped up, what, 6-7 points. And the other aspect of the VIX right now, which is being distorted by what is going on in the US presidential elections, unlikely to do so until that event is over, and probably thereafter. The VIX is riding high at 25.8. It's way out of whack with where it should be. It should be down, I wouldn't say in single figures, but it should be down in the 10, 11, 12 region. It is refusing to fall, and it's refusing to fall because the market per se is buying volatility. And the reason the market is buying volatility is on the expectation that this election is going to be very dirty, very messy. There's going to be a lot of claims and counterclaims, and the expectation is that this is not going to be, whilst it might be a clean result, there is going to be a lot of dispute, or the market is suggesting there's going to be a lot of dispute thereafter, that it wasn't fair, that there was ballot was rigged, blah, 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 and all the rest of it. And that is why the VIX is still holding high at that particular level. Because given how much this market has rallied, whether you let's just you know, pop up one of these. Given the rally that we've seen in the last, what, 3, 4, 5 weeks, whatever, you know, the VIX should now be down, as I say, now in the 10, 11, 12 region, and it's not. It's remaining high, and that's the reason why. So if you're looking at the VIX and wondering why it's not falling hard, then that is the reason. Simple as that. Let's just go hop back onto where we were. Let's have a look. Let's go to the currency strengths multiples. Have a quick look there, see where we are. Pop that out of the way. This is on 1 minute, this is on 5 minute, this is on 10 minute, this is on 15 minutes. So it gives you a complete perspective. And in terms of what you're looking for, is you're looking for the trend that you're going to be trading, or if you're getting in early, if you're looking at reversal points, what you want to see is pretty much what we're seeing right now in terms of euro. The euro was oversold, if you remember, way back to the midpoint of the session. Now we're starting to see it move higher. Buying here, we've got the moving higher here, buying on 10, and we've got buying on 15. What we've actually seen on the 1 minute, we've seen that buying develop. Now we're starting to see it roll, because when you look down on the very fast time frames, that in effect is what you're seeing all the time related across the time frames. So when you look at a 5-minute chart or a 10-minute chart, a trader on a 10-minute time frame is not going to be particularly interested in what is going on here. All they will see is maybe a little pause and pullback. It's what I mentioned earlier on. And that's the CSI alongside VPA will also help to give you a clear view on whether the trend that you're trading and the pullback you're seeing is actually just a pullback, or whether it is actually a full-blown reversal in trend. Because if it's a full-blown reversal in trend, you will see it over on the 10-minute, the 5-minute, and out onto the 15-minute. All you're seeing at the moment is you're starting to see that buying in euro develop across the time horizons. You're seeing the dollar roll over here on, it's already gone on 1, it's well down, so that would have been a nice trade somewhere. You know, scalpers would have been in, or I don't know, the Aussie dollar maybe, New Zealand dollar, but certainly the Aussie dollar CAD here as well. You've got the yen moving with the euro, with the dollar, so there wouldn't be a strong trend there. But the dollar is starting to kick over. It's just starting to flatten off here on 10, and just starting to maybe pause a little bit on 15. So in terms of what you want to see as a longer term trade develop on euro, you want to see continuation of buying, you want to see strong selling of the dollar coming in, the dollar starting to roll here, and the dollar starting to roll here. And the other thing about the CSI is not only is it great for getting you into these positions, but once you start to see it moving this way, it's also fantastic at helping you either to stay and also get out. If you're in a position and you've seen the currency pair that you're trading move from top to bottom, or it's starting to flatten, maybe starting to roll over in the faster time frame, maybe that's the time to close out. You look at the volume. What is the volume telling you? You look at the indicators. You look at the trend monitor across the time frames. Maybe you're on Renko. Whatever it is, it's a terrific indicator. It gives you so much information about what is going on in the market. Let's have a quick check on currency arrays. Where I've got somewhere here or the other. There we go, up at the top here. This just gives you a straight visual on strength of trend. It also gives you a visual on the universal sentiment towards that particular currency pair this time, rather than the currency itself. And in addition to that, you've also got this second ranking ladder alongside, which gives you a visual in terms of when a currency pair is either approaching or at a potential overbought or oversold state. When it's moving to potentially oversold, it comes up in brackets here with this darker color. When it gets to an overbought or oversold state, you can see up here, it moves to a brighter color in blue, and the brackets are removed, and you get the same effect down here at the bottom. So we're still seeing that there, but the trend is starting to weaken a little bit. The pound New Zealand was pretty strong. You can see over here in 5 minutes. Cable was up here in terms of strength, but the actual weakest at the moment was certainly in the last 5, 10, 15, 20 minutes was pound New Zealand, still pushing lower. And in terms of sentiment towards, I've isolated out on the pound here. Just click that on and off and you'll isolate them out. There we go. So I've just isolated out again in terms of the pound. And what that will then show you is just the pound related pairs. And obviously what you want to see from an ideal perspective is you want to see these two down here, and you want to see these two, certainly the pound Swiss to join it, but you want to see the euro pound going the other way, because if you're selling pound, then euro pound should be up the top here and pound Swiss should be down the bottom here. But if you go back to the CSI and just look at that on the faster time frames, that's pound Swiss and euro pound. Let's just go back onto there we are. So, you know, pound Swiss, you're not seeing that particular strength, because at the time, you know, this was on, where are we? That's on 1 minute, on 5 minute. In terms of the price action, you can see here the pound was moving with the Swiss franc. The Swiss franc's green, the pound's yellow. So where the two of them are moving together, you are not going to see a strong trend, and that's the reason the pound Swiss was sitting up mid-table, because there wasn't any particular divergence of strength. Now you're starting to see a little bit of divergence, but you're very deep down into the oversold region. So, you know, it's not a great trading opportunity in terms of a 5-minute time horizon. You know, you'd be better off looking, because you've got no travel area. We're right down here. We're trading in the oversold area. What you're constantly looking for is top and bottom all the time. Whether you choose to elect to use the tactic of getting in early and trading a potential reversal before it's actually started, or whether you're trading the trend once it's underway, doesn't matter. You're always looking at tops and bottoms, because that is the greatest opportunity in terms of distance of travel for delivery on the trade itself. I'm going to wrap up there because I've gone over time. Apologies for that. Just to highlight where you can find all the bits and pieces. Quantum trading, you'll find all the indicators here: MetaTrader 4.5, NinjaTrader 7.8, and TradingView. Trading Station, yes, it will be launched this month. As Anna mentioned, there are, I think, about 70 or 80 videos up on the Quantum Trading YouTube channel. I've got some more to do. That's a huge number up there, but that's taken a massive amount of work. It's on 9.5 with interactive brokers. So if you have an IB account, you can use that data to drive the TradeStation platform, or you have the option of TradeStation Securities, which runs on version 10 and above. Both fantastic platforms. We've got all the indicators there. We've got radar screen, which is immensely powerful. It's fantastic. Can't wait to show you that. There will be we are going to do separate webinars during the week once we've got TradeStation launched. Once that's up and running, we're going to drop back onto TradingView. We're going to port across all the other indicators there, because we now have the option to do that with the Pine script, which we didn't have before. We've got object drawing and line drawing, so we can port those indicators across. So if you have the full TradingView package, well done you, because you're going to get all those indicators for free, and guarantee you, as soon as those are ported across, then the price will go up and will be in line with MT45. So I think it saves a couple of $100 at the moment, if not more. In terms of the Forex Education Program, you'll find all the details here at quantumtradingeducation.com. It is the complete Forex trading program because it covers everything you need to know. The 5 core modules there: psychology, fundamental, relational, technical, and mechanics of trading, and all the videos below. I think there's counted them up the other day for someone, I think there's 430 odd different lessons. There's 200 to 250 hours of video in here. There's 13 PDF downloads, plus you get us in the VPA room, plus you get all the indicators, the full suite of indicators. I mean, it's, to be honest, I would hope you would think it's a no-brainer, and I know we have some students in the room. It is we're very proud of what we created. It took 2 years to put together. That's how much effort we put into it. So it wasn't something we put together in 5 minutes, I can assure you. There was a lot of blood, sweat, and tears went into it to try and deliver something that is complete and will give you a foundation of confidence to trade these markets. This is where you can find Anna, annacooling.com. You'll find all the analysis up there, blog posts, and all the links to all the various places, with all the books which are up on Amazon in Kindle and in paperback. So that's us. We're going to run. We have to take our little Bertie out for a walk now, and then have a cup of coffee when we come back. So enjoy the rest of the trading morning. Enjoy the rest of the trading day. We are back later at 3 o'clock UK time for the US session on the futures and Forex as well. So thanks very much indeed for coming along. Hope you enjoyed it. See you again soon. I'll see you later. If not, we will be back at the usual time next week. So bye for now.